Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about DLF, a large cap infrastructure company. Let's understand where the stock is headed and whether you should invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about DLF, I have a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up there. For detailed company or market talk or a number of stocks you are holding or you want to build a portfolio or anything, you can directly email me and we can work things out. Now about DLF, established in 1946, they provide infrastructure and commercial real estate services. It is a leader in this space, and it deals in high-end commercial property construction across India. A very renowned brand, and if you would remember 10-12 years back, it was regarded as one of the best companies in the Indian markets, and was investing in a lot of projects all across North and South India. Rental income is a big source of revenue for the company, and market cap of the company is around 37,000 crores. If you look at the financials of the company, then the sales dropped by around 60% in Q1, and we would all understand as to why that happened. Profit of 144 crore became a loss of 178 crores. There's high interest cost, understandably, because of the kind of business that DLF is into. Extremely high debt. Return on equity of 0.5% and operating profit margin of 17%. OPM or operating profit margin is pretty decent, but ROE is not quite up there with respect to the favorites of you can say investors, and probably that's why leading investors are staying away from such a stock. If you look at the performance of the stock has struggled since January 2018. So probably the recent peak of the last 3-4 years have been made in Jan 2018, and over the last virtually 3 years the stock has done nothing, have lost 50% of its value from peak, as I mentioned in that period. High promoter and institutional holding with only 4% free float is there, but you would have to understand that the people who are invested into the company are also retail players and large institutional investors. The problem with the company is the high debt, and high debt is a huge concern for the company. One of the best commercial property companies at the moment. So when we talk about commercial properties, when we talk about business centers and construction of malls, etc., we talk about DLF as one of the brands. So in terms of corporate governance, the company is pretty good, but because of the kind of situation that India has gone through, because of the kind of economic stress that India has gone through over the last 3-4 years, things are not great on the infrastructure and real estate front. Especially commercial real estate has shrunk to abysmal value, because they are because it requires a lot of cost, and it takes a lot of cost to build that and maintain such infrastructure. What could be the reasons for the decline? The sector has been under stress for a number of years, and it is not that 2-3 years, but over the last 7-8 years, I've seen the sector go through a huge patch of virtually very low business and low key businesses. Not even 1 year of handsome growth have we seen in real estate things. Current scenario has deepened matters. So, scenario of lockdown and shutdown in India, 45 days of virtually no work, and you need to understand that for construction activities you need a lot of labor and people to get things going. It is not like selling biscuits or FMCG products or anything of that sort, which requires just opening up a shop or closing that shop down. When you have a number of projects going on, which is a multi crore businesses or projects going on, then you have a lot of people, thousands of people, or at least 1,000 to 5,000 individuals involved in it, and once there's a complete shutdown of activities, then it is very difficult to restart on a full scale, and that is what is hurting DLF and all infrastructure and real estate companies. It will take more than a year to revive at least from the current situation, and that is why the stock hasn't performed that well compared to other sectors where the recovery has been very sharp, swift, and many of the stocks are at new 52-week highs. So investors are looking for safer bets in which they know that there is cash coming in and numbers would be better as things go on. So they want to stay away from real estate, construction, and infrastructures. There are concerns over executions of projects and funds. So you would understand that real estate projects require a lot of fund, and on many occasions these you can say budgeted funds go overboard. And at in 2008 or before that, there was a lot of funds available in the real estate sector, so a lot of money was floating around, and that's why DLF did really well. But now with the squeeze of the economy, we have had the GST, we have had the demonetization, we have had now the issue with the pandemic. The money is not there, and the money in terms of in real estate and in infrastructure activities are not there, and that is also a concern on part of the investors, that even if execution takes place, then how would it take place if there is no money? So business has been totally stalled virtually compared to what it was, say, in 2016-17, and even at that point of time it was not very hunky dory. So you can understand at what levels or depth of abysmality real estate or commercial real estate has gone to. If you look at the technicals of the stock, then it is trading well below the 200 DMA of 175. It is right now around 160, 162. So it is around 10% lower than the 200 DMA, or at least 5% lower than that. There's strong support between the 135 and 141 region. So if you really want to buy this, although I won't recommend anything in real estate infrastructure, but if you really want to buy, probably wait for 135 140 levels to get in. There's a long term support at 115, which if goes, then we are looking at even 60 levels on the stock, which is not a far cry, because if things really go bad going forward, then you could see the stock price plummet also. A heavy up move is only expected above 190. You could see even 250 to 280 levels, but that would only come through once the numbers improve. Once we have any kind of daylight for some kind of improvement in numbers or infrastructure activities. So technically it looks still weak on charts. I would buy above 195 200 with a stop at 190. That would be a better strategy to do. So what needs to be done, in my opinion, and what I'll be doing, I would avoid if I have not bought into it. If I bought into it at higher levels, I would hold and wait for that up move any time. I mean, in 1 year, 2 year, 2.5 years, and then probably book out. Probably 250, 260 is possible over 2, 3 years. Have a 5 year view. Let's see where it goes. Probably we'll have pops going towards 240, 250, and that would be a better level to exit. It is a top company, but in a very lagging sector, so you need to understand that. And better to be in the leading sectors, consumer stocks, etc., rather than being in you can say high gestation period companies with high debt, etc. So this was my video on DLF. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thank you.